And welcome back. We're at day 3 of the annual Frontier Securities Investment Conference here in Ulaanbaatar. And I'm joined by Mr. Kenneth Tse from JPM. He's the Managing Director, Asia Pacific of Depositary Receipts. Mr. Tse, you spoke to us yesterday about depositary receipts. Maybe you can just briefly again introduce us to what they are and how they can benefit both investors and companies.
Okay. Deposit receipt had a very long history. It's a product that can be used by companies around the world to very efficiently list their shares in a stock exchange and overseas market, which also allow them to raise equity capitals and attract investors to their shares.
I see. And how would it specifically benefit Mongolian companies? Is it something you're looking at to expand, or?
I think there are a couple of things here. First of all, Mongolia is going through a privatization project. The country is rich in mining resources, and but then the domestic stock market at this time is about $1.5 billion. It may not be able to absorb such a huge amount of fundraising. So for these privatization projects, one of the ways for them to go through the IPO process is to also consider to list their companies in overseas markets. In this in this process, DR is an instrument that they should seriously consider. DR is an instrument that helped companies to sort of overcome all sorts of legal constraints that exist between different markets, and it can allow it to very efficiently to list shares from any markets in overseas stock exchanges.
Okay. I think in Hong Kong, there's not a clear, like, people are indifferent if you do depositary receipts or an actual listing, but what would be the advantage in Hong Kong why wouldn't they list ordinary shares on the stock exchange?
When the Hong Kong Stock Exchange rolled out the deposit receipt regime in 2008, they make it very clear that the decision to list DR or to list common shares would rest with the issuers. Now, the issuers need to look into their own legal environment in the home market as compared with the requirements in the Hong Kong market. The whole reason to roll out DR from the perspective of the Hong Kong Stock Exchange is to allow jurisdictions to list their shares in Hong Kong, which otherwise they would not be able to do so.
Okay. And in general, how is JPM looking to capitalize on the Mongolian growth story, or what is your commitment to this market in general?
JPM had a long history of innovation and leadership. We, in fact, invented the first DR worldwide. That was back in 1927 when we helped a UK company to list in the US. We did the first DR in Asia, which was Sony of Japan in the early 60s. And we also did the first DR program in Latin America. We want to uphold our tradition of being the first in growing markets around the world. Mongolia is a country that's going through a high growth process. This is certainly a market that we would like to help them to tap into the international market.
Okay. Mr. Tse, thank you very much for joining us today, and
all right,
please enjoy the rest of the conference.
Thank you.
Thank
Thanks.
you.